Okay, everyone. So, what I want to share with you guys today is basically a simple strategy that we used over the course of the last year to help us predict the highs that took place here last month. Now, what it did was it didn't tell us exactly the momentum that we would see on the correction. It prepared us for the correction itself, though. And what is really important about this strategy is that it takes place on multiple time frames in multiple markets. And it doesn't matter if you use tick charts or time frame charts, if you trade wheat, gold, Amazon, Netflix, whatever you want to trade, it's going to apply. So that kind of takes care of like one question I get every single time I give a class. Can I apply it to XYZ? Yes. My answer is always going to be yes. You can even apply it to reading the housing market if you want to. You're going to see the exact same strategy play out anywhere we see human emotions marked and tracked on a chart. So what that means is that when we are looking at these charts, one of the best indicators that I have found is going to be one based on Fibonacci. We're going to look at just a couple of really simple Fibonacci tools in this session. Now, there are other ones that get a little bit complex. There's different ways of how I will attach Fibonacci given different periods of the market. But we're going to keep things really easy for you guys here today so that you can walk away with just very simple tools and also a core pattern. So whenever we're looking at indicators, whether you're using moving averages or even volume, what you have to keep in mind is that I don't ever recommend taking trades based purely on an indicator alone. When we're looking at strategies and patterns that develop in the market, what we're really paying attention to is a combination of traits and characteristics. So the strategy that I'm going to show you today is one that can take place at many different levels in the market, but there's going to be certain levels where we will get the strongest corrections. And so we will look at different target levels and how trend placement can affect that as well. All right, let's flip on over here. I'm also going to show you some of my charts as we go along too. Charts that you find here in today's session are with NinjaTrader. So a little bit of Fibonacci basics. So most traders by this point are pretty familiar with the concept of Fibonacci, and Dan Brown made it popular good, 10, 15 years ago or so. But we're seeing it pop up a lot more. When I first started using it, it wasn't really that common in the markets yet. It was just kind of starting to catch on. Basically, what it is it is a way to visually see these emotional turning points that are happening in the market. And the one great thing about Fibonacci is that you can kind of fib with it. You can put things at different levels and still come out with relatively the same types of support or resistance. And I'm going to show you some examples of that here as we go forward. What this means is, for example, if you have an uptrend, maybe there's some rounded highs on that uptrend. So you take your Fibonacci from the first low to the first high when the momentum starts to change. And then another time you might take it from the absolute low to the absolute high. And both of those will give you different fib levels, but you'll find that there's a lot of overlap or strong correlation to where those levels fall. And if you end up leaving these things on your charts for days or weeks, you'll constantly see the market test them and retest them over and over. So Fibonacci, as we use in technical analysis, all of our tools are based upon ratios that are happening in a Fibonacci sequence. So Fibonacci sequence is basically just the sum of two previous numbers equals the next number in the series. So it's just one core type of mathematical series. One example is we get the 38.2% that we use in our Fibonacci indicators from the ratio that is made by dividing any number in that sequence by the number that's found two places to the right of it. And this is after the first couple of numbers. So once you get to, fifth, sixth numbers in the series, you're going to find that this holds throughout. So 34 divided by 89, for example, approximately 0.382. So Fibonacci levels to watch, there's a couple of them that stand out. You're going to find many different levels and ratios that traders use, but these are the core ones that most platforms are going to have, and I really don't have any need to go and look into any other ones. These are the ones that I use as my core. So we're looking at 23.6, 38.2, 50%, which those of you familiar with Gangon, I can never remember how to pronounce that. I'm used to reading it, but not hearing it. So 50%, 61.8, 76.4, 100%. Feel free to correct me on which one it is. I'm always learning too. So when we're using Fibonacci to strengthen our hands in the market, one of the very simple types of Fibonacci that you're probably already familiar with is just the Fibonacci retracement. So this is a recent chart that I was using. I had bought a pivot low off of oil. So I was looking at resistance levels on the way up, places that I could add to my position, places I could protect. And what you'll notice is that when we go from the high to low of this downtrend, it's a nice two-wave downtrend for one thing. And we put these Fibonacci retracement levels on there. We're seeing reactions at every single one of these Fibonacci retracement levels. So when it comes up to the 76.4, my colors are a little bit light because I grabbed this from my trading computer, but you can make them a little bit darker too. You can make them however you want. I actually have the 76.4% zone as a bright yellow on most of my charts, or an orange. It's kind of somewhere in between. And the reason for that is that if we have a very strong momentum drop and the market is retracing that move, and we only have kind of short little corrections on the way back up, once it hits that 76.4, we're more liable to get a little bit of a bigger correction. So if you're looking for stronger locations to protect some of your profits, or to catch some of the smaller reversal type of trades for a bigger correction in that trend, that's usually the best place to look for it at. It's going to be especially true if each of these corrections is really small on the upside compared to maybe a little bit of a bigger one over here on the downside. Then that 76.4 can lead to an even bigger correction. It's usually going to make it back to the 61.8 pretty simply, but a lot of times it'll make it back to that 50% as well. So those are levels that I'll look for as reversals or corrections. Now, what you'll notice is that if I add a line connecting these lows, that's the only point that it breaks that entire uptrend channel. So this is really typical. We don't see this happening all the time, but it happens a lot. Again, when this momentum is a really strong average move on the downside, and then we have a pretty decent recovery underway, watch that zone there. Now, another way that we'll use retracements is as a level of resistance to look to get in on continuations in a previous trend. So you might have a downtrend over here and then get a correction like this forming, where you might have a pull into 23.6, up into 38.2, back into 23.6, and you have a beautiful head and shoulders forming. So the fact that this held under that 50% level, when this is an average to stronger than average momentum move on the downside, means that it's going to have an easier shot of breaking through that previous low when it gives us the continuation move. So that's another way that we can use these retracement levels. Now let's move on ahead here. So I'm going to pull up a 15-minute and a 1,000-tick chart on Amazon here. And I'm just going to show you some of these retracement levels. So first I'm going to show you this one on Amazon. So this is a move coming off of the lows on Amazon. This is the 1,000 tick chart. And what you can see here is that there's a trend that's in play. We've got three main legs up, but the first two are a little bit faster. We got a smaller correction in between. So if you're moving on this, let me remove this here. If we're just seeing this unfolding where I'm going to put a few more days on here, where we go back and we can't really see how that's playing out on the continuation. If we go and add our Fibonacci retracement from the low to that high, what you'll see is that it will give us these different levels of correction. So it first pulls back into the 23.6. We get a little bit of a pause there. Then it comes into 38.2, pops back up, gaps down into 50%. So at this point, we're still holding the 50% correction. That means that when we get things moving back up to highs, it's easier for it to try to break through that previous high. Now, if it comes in between this zone, the 38.2 and 50%, sometimes this previous high can serve as a resistance level where we will see a stall, but then it will be able to break through it. So for example, as this plays out, just pretend you don't see what happens over here. Well, I guess it doesn't matter. It does go into that extra correction. But what can happen is that right in here, clear that, you might get a move that goes back up to that level up there, the 0% basically, pulls back again, maybe comes into like the 38.2 or 23.6, and then breaks it on the third test of that 0% retracement. So that's pretty typical. One thing on here that we can also look at is another type of Fibonacci tool called the Fibonacci time extension. So when we're looking at Fibonacci time extension, one of the things that we can look at is this absolute low down here to the high here. When we've got that 1-to-1 ratio upside to correction, that's the first point that we have really strong probability of getting a breakout happening. The second is when it goes about double that. So at this zone, since we have good two pullbacks, we've got two highs already coming into the third over here. That's a beautiful breakout zone for this as a continuation. So adding that to the fact that it held above that 50% correction, even though it stalled a little bit as it came back up into that previous high, third test of that upper zone breaks really easily into the end of the day. So we see the same thing on the 15-minute time frame. But sometimes our 15-minute charts or our time frame charts, like the 5-minute, the 1-minute, the 2-minute, versus our tick charts might look a little bit different when we're using some of the Fibonacci tools, especially the time development and Fibonacci fans. Those are going to hit at different levels. So Fibonacci retracements and extensions, those are going to be basically the same, no matter whether you're using tick charts or time frame charts. But when you start to use things like the time extension or the Fibonacci fan, you're going to find that there's some differences. So for example, here on the time extension, we go from the low here on the 15-minute and out, and look at this. Here's where we get that 100% extension. Well, it doesn't go on the time frame chart. It only had that really nice measured time development when we were looking at the tick chart. So one thing that I get asked to me a lot is, which one do I prefer? Do I prefer a time frame chart or a tick chart? And the answer is neither or both. It can be either one. I really don't care. But what I want to see is that time development happening on one of the charts. So when we're looking at things again, like the upside correction and then the time development, here's the bigger one here. you can see that again, it doesn't quite hold like it did on the tick chart. It's a little bit off. So here's the tick chart with that same one. Actually, pretty close here. I can line those up exactly for you. So we don't always see that perfect correspondence. Whoops, there we go. It's especially going to be true when you come down to like some of the smaller time frames and you're looking at maybe like the 50 ticks or something coming into the open versus maybe a 1 minute chart or a 30-second charter, especially when you're trying to time some of those continuations. You'll see some just really slight variations, and sometimes they're going to be very extreme variations, but the intraday ones tend to be the most different. James asked a question, really similar to this actually. It says using a fib fan on a 9 time-based chart, a tick chart. Is that okay? A time-based chart would certainly have a different result. Absolutely. So a lot of times I'll put them both up, and what I'll pay attention to is which ones are actually hitting the best, and then that's the one that I'll keep on the chart. And then I'll just remove the other ones. All right, let's go on forward here. I'm gonna go back to my PowerPoint. And now we're going to look at establishing target levels and reversals. So this brings into play another type of Fibonacci tool, and it's called a Fibonacci extension. Now, some Fibonacci extensions are actually just 2-point Fibonacci retracements with the extensions put onto them. So for example, let's see here, this Amazon chart, for example. Let me add that here. If I go and put the Fibonacci retracement from this low to this high, what you'll see is that I've got some other numbers up here. I've got a negative 23.6 and a negative 38.2. They're kind of light, but they're up there as dashes, and we see a stall at that negative 23.6 and the reversal at the negative 38.2. So some platforms will consider that to be a Fibonacci extension. It's basically just a part of the retracement tool. But the one that we want to look at is going to be a 3-point extension. So a 3-point extension, I'm going to pull up let's see here, we're going to pull up the 50 tick chart on the NQ. So we're looking at our NASDAQ E-mini here. And the first one that I'm going to show you is right here. So we were looking at this 2-wave pullback into the end of the day, the other day, heading into the weekend. And what we're looking at for that Fibonacci extension is we had the original main move off of the lows, 2-wave correction, and then the extension. Now, notice here that the momentum on that first main impulse wave or trend move there, really similar to the continuation momentum. So this is key, because when it is similar like that, then it's often going to hold that 100% extension to the T. Now, what I usually recommend for newer traders where you're kind of like guessing and like working on your strategies for exits is to take something off at 76.4, because if you're off by a little bit, then at least you've got something protected at that one level. So as you're working on your exit strategies, protecting a little bit at that point is going to help you out. You might not have enough contracts to do that. It's a little bit easier for newer traders to do it in stocks than it is to do it on like the minis, but you can do it on the micros as well. And that's kind of gonna help you when things aren't quite perfect. So let me show you an example. I'm gonna scroll back over here. This was a buy setup that I'd had earlier. Previous day, you can see it here. So this was something I built into on the upside because it was coming off of this 2-wave low. Watch this low pattern here, because this is going to be the strategy that I'm going to teach you guys. So this is called a 2B down here. The one that we're going to look at is the 2T, because that's what took us off of the highs in the overall market on the weekly time frames. So what I was doing was building into this because I was looking for continuation. of that trend reversal. You'll notice it's a bigger trend break here with strong momentum. So on this, there's a couple of ways to put your Fibonacci extensions. The first one that I started with was here, just the first pullback. That put the 100% level way up there, which you can see up here. And this would have been okay if it had offered a really good continuation almost right away, where basically this continuation would be like a little check mark and continue. So if it had gone with that momentum, then that would have been my target zone. What happened though was it went out longer. So when it goes out longer, when the next impulse wave starts, it's really starting over here. So that's where I really want to see that continuation move. So I can move that Fibonacci extension over to here. And now what you'll see is that the momentum is slower overall compared to here. So I adjusted my target for that 76.4 and expecting that at that point, we would start to have a higher probability of longer corrections going into the end of the day. So a little bit of that shift in momentum, 76.4 becomes a more ideal target level. Now the opposite can also happen. So let's say, for example, we get a move. Flip this over and fix that there. Try that again. All right. Move that was into the last couple minutes of the day, last 10 minutes. Here's the one where we saw that measured move, but then it also went and broke down for continuation move. And we saw this unfold in a couple of ways. We saw the first one here, momentum was kind of similar, but picked up a little bit, hit 100% right here, then went to 123.6. I'm going to remove this and show you that one first. But there wasn't a second base or a second correction here. So on that one, you can use this high because that's really where the momentum starts to go. So it makes it down into the 100%, pretty similar momentum, gains a little bit of speed, bounces, then pulls into that 123.6. Now watch this. When I go to that last high zone where it kind of bases out again, does like kind of that inverse check mark thing here. If I go and use that last high, then we've got that 76.4 and the 100%. Almost exact same levels as when I used the high here. So this is where I said that Fibonacci has a lot of give to it, leeway into how you apply it. So you might use different levels than I do, and yet they still give you the zone for where the support or resistance is going to happen. And then you want to look for other additional clues at those zones. So like here, for example, we have that momentum shifting. When it hits the 61.8, momentum slows into the 76.4. That tells me there's a better chance we might get a little bit of a bounce off that zone. Same thing happens down here. We've got a slow and then a shift with a slightly lower low. So that's the same thing, just on a bigger scale. So those are going to be the things that really help determine exactly where we get out of a trade or where we're putting in a reversal on that trade. Now, the other example though, that is more poignant here is a little bit bigger. And this is where the momentum picks up. So we have that same pattern playing out again, but on a larger scale. So here to here, we're now encompassing that entire move. And then we're going back again to that first pullback because this is a smaller base correction here. So if this had done like a two-way like this and offered a continuation, this is a lower high, just like this is, but that's the main one that I would start with for that Fibonacci extension in that case. So here again, we don't really see much of a reaction at 76.4. It's kind of going into it with some strong momentum. Momentum's actually picking up here compared to over here. So that usually will shift my target level to 123.6% instead. So when the momentum was slower, I aimed for 76.4. When it's faster, I'll go for 123.6 as an extension. So we can see a little bit of a pause here at the 100%, but not really enough to totally turn it around. We get a bigger reaction once it gets to that 123.6. And then it pops back into the 76.4. So these retracement levels will continue to hold as resistance as the market turns back around as well. So when you get reversals off of these lows with these extensions, you can still keep those extension levels on your charts because they're still going to serve as solid support and resistance levels on the reversals. So we just looked at that one. So the specific pattern here that gave us that big heads up over the last year is one that has taken a year to develop. And it's actually taken longer than a year from where it first started, but the pattern's called a 2T. And I was really inventive when I named this. It's just 2T for two tops, and then the reverse is 2B for two bottoms. So what we're watching is we're looking at a move up into a high, a move to a slightly lower high, and then move to a slightly higher high. And this level here, you're going to find some variations for how this pattern will play out. And that's going to be key when we look at what happened on the weekly time frames. So sometimes the momentum will be stronger and you might see an even high or even a slightly higher high, and then still see another version of that pattern play out. So you're going to find variations in the strategy. So what you want to keep in mind is what's going on with the core of the strategy. So usually what I'm doing is I'm looking at this channel break as an entry trigger. My first target zone becomes this midway congestion. My second target zone becomes where this first pullback had broken to the upside. So we'll often see pauses here and pauses here. And whether it manages to do a full reversal or not depends upon where the strategy is taking place in a larger trend. So you have about a 90% chance that it's going to come into this correction here, somewhere within that correction. Usually I'm aiming for smack in the middle, but you have a 90% chance that it's going to come into that zone. You have almost a 90% chance that it's going to come down into that third level there. So first levels are channel break, second level is this congestion, third level is this congestion. In a larger trend, this will go into another continuation. A lot of times you might get a head and shoulders pattern, for example. Stop on this is you can take this channel, put your stop above that high, give it a little bit of room so that there's some wiggle room there, or you can do it with the tighter move too, just depending upon what's going on the smaller time frames there. So this is a chart from a class that I taught, maybe it's about a year and a half ago or so, and we were looking at this exact same pattern. Because we were timing some reversals that were happening in the NASDAQ. And I was going back and showing how this pattern again had helped us time that reversal at the highs. We were looking at 7,700 on the NQ, nice round number up there. But what you'll see is that Fibonacci extension tool. So we had the first initial move up. It came in just slightly under the previous high. We had that pullback. And then I used the last pivot low there because that's where the impulse for that momentum move starts going. So we had that measured move almost 100% to help us time that reversal. And at the time this chart was happening, it was just coming into the first main target zone on that strategy. So it's also corresponding with the 23.6% right here with that Fibonacci extension. Let's look at how this ended up playing out after the class. Grab that NQ. and here's the daily time frame. So here's the same level. Now notice if I go and put this at the absolute low, there's a little bit of a pause there at 76.4%, but the momentum's picking up just a little bit as it's coming into that last portion there. So that's why it's really important to look at this where the momentum is really playing a role here. There's all this congestion in here, so it's really part of this correction. It still stalls at that same 100%. So even if you use that absolute low, you're still going to be looking to take your gains on a buy as it's coming into that level, or start to time that to begin to look for reversal for short. Now, what we saw happening here is that I'm going to go back to where that momentum started taking taking off out of that range. This went and did a double top. We basically saw another version of it, but a little bit slower. So it had a little bit of that check mark in there. So measured move here is more like that to that is what you'd be looking for. And this is your midway two-wave correction. So it didn't quite go to a slightly higher high, but the stronger this two-wave is, the better the chances that you might get a next one that is going to be slower. So what I mean by that is we'll often see a series like this. We go into, we'll see a 2T that's kind of steep. You'll get another pullback. And then you might see something that's a little bit further out and shifts like that. This is important because this is exactly what we see happening on the ES on the weekly time frame. So you'll see that here as we go further in our class here today. So if we look at where we are at in the market compared to this chart right now, we would be, somewhere on this trajectory in here. If you're looking at that same pattern. So you can see this went and continued on the downside. If we look at it over here, we're right about here. So where the momentum was really stronger and really broke that channel, we're looking at about here on the weekly charts for the market right now. And we will take a look at these here in just a minute, but I want to show you another example of the ES. So here's the ES. Again, this is pulled from another class a while back in 2019 here. And what you can see is really similar pattern. This one is a little bit stronger. The momentum's a little bit, faster in that there's not as much of a correction in here in this midway zone. Still holds that 100% perfectly. Again, we're back at that 23.6%, and that's often right in the middle of that correction there. So it's a pretty good level to look for as your target as the first correction. So at that point, things can happen where you can get pauses and a continuation. If this is a slower pullback, you might even get like a base that can go into a head and shoulders on the downside. So that's why we're looking at that as a first target level. Pull this up on the historical chart here for the ES right now. So what we're looking at is actually back here. Here's where it was forming. And this was another one that I nailed to the day because of that 100% extension. So we were looking at this in our forward focus classes back at the end of that year. Well, it was going into the summer actually. And looking at that for the zone that we could have that larger correction taking place. And it's really key that the momentum on this move is pretty comparable on both of those waves because it means that that 100% has the best chance of holding. So what you do is that as it gets into that level, you go and you drop down to smaller time frames and look for strategies that are then pointing on the downside on that smaller time frame. So here was where it was hitting that 23.6% extension. And you can see that little bit of that rally right there. That's kind of like where we're at on a monthly time frame of the same pattern. So you can see that this ended up pulling back, having another move to the downside. And then I'll show you how this plays out. Then we saw it go into congestion, further downside. So we could even be considering ourselves right along here. And then lo and behold, we get the bigger version of that same pattern. So here's what we were looking at over the last 2 months for target levels. Originally, we were using the low from the pullback here. Well, actually, originally we were using that first pullback there. But then once it established a second low, we were looking at that. But you can see it didn't get going quite at that second low. Still took another move to really get going. So this gave us the heads up way at the beginning of last year that this potential was there because it had that two-wave pullback and then moved back up at a steady pace without much of a correction. So as this was approaching that previous high, we started to look for that to start to pause, that it could go and give us a correction for a couple months and then have the potential for that 2T. So the fact that it did this deep V where it was already kind of breaking this bigger channel here, that's the first heads up that a 2T is potential. You won't always get that set up. Sometimes it can go into like a megaphone. We're going to be covering this in League of Traders this week. So sometimes it can go into a megaphone. There's other patterns that can develop at that point, but this is one of the highest probability ones that we will see unfolding at that time. So since this went to a slightly higher high, what I wanted to see was how did it pull back there? If it pulled back like this, and the spacing between these highs was maybe 6, and then the spacing here was 7, so slightly bigger, then that would have given us a better chance that it would have been like a megaphone that could have given us a reversal off of that high. We were already looking for a larger time frame correction. We just didn't quite have the full pattern developed yet. So after this then had the two-way pullback here, that's confirming our momentum is more of a sideways time correction, that you're not going to get the megaphone, that really the only next pattern that you're going to be looking for is the 2T type of pattern. So the first zone that that potential was right here when you got like a smaller version of that same thing happening. So see how you got the V right there, goes into the previous high, and then it goes into a little bit of a two-way base here, and the measured move right there. That was the first possibility for where that could have reacted, but we didn't get the trigger. We didn't get the confirmation for that. Intraday, there were some smaller setups, but we didn't get any confirmation for additional strategies on the short side there. So that meant we would then need to look at the bigger measured moves. And that meant looking at this one to this one. So at that point, you can see that with that extension, here's the 100% extension. Momentum picks up a little bit. It manages to break to the 123.6. It holds both of those perfectly. So this 123.6 part, this is what I would consider to be a flush. Now what's interesting on this is that momentum really started coming off of this low. So if we change where the placement of that Fibonacci extension is to where the momentum is actually starting to break and confirm, we're going from there. So now notice it's holding 100%. We're still in the same zone as if we had used those previous fib levels. So you can use both of them, but this is the one that I prefer because it's where the momentum is starting to base, starting to break and continue with that same strength. So you'll see that progression if you go back and you watch the forward focus classes over the last couple of months. You'll see that progression where we were looking at those different levels of the lows and giving us ideas as to where those would hit as to those bigger time frame targets. Now, this pulled back pretty quickly into that congestion there. And right now, this was pulled from a class I gave a couple of weeks ago. So let me show you what's happening right now on the weekly. So here's the weekly of the ES. As you can see, we're starting to get a little bit of a bounce here. It had a pause there at that midway point right here. So here's your two waves up, had that pause at that midway point, and then went and continued. The NASDAQ The same thing, but a little bit different as far as how this plays out here. So let me clear this. So you can see on the NASDAQ, weekly time frame on that one. Oops, I guess I don't have one up here. So we'll just squish this up and show you this one. So here, a bit of a pause as it came in kind of the upper zone of this congestion. And now we're getting that first bounce where, remember those from back in, let's see, where was it at? Back in here. It kind of gives those little bounces right there. That's what it's doing over here. So we're kind of at those first early stages. So this could easily go and develop into something that breaks down lower after a little bit of reactionary move here. Now, other ways this could play out, which is what would happen if, say, suddenly there's maybe a cure tomorrow for COVID-19 and, everything starts to become more hunky-dory in the world, then what you would see is closer to what we had happening on that first chart of oil, where that 76.4 could be a good level of resistance. You might see like smaller little corrections along the way, and it could make it back up. But we don't necessarily have that going on here. So with everything going on in the world, there's a bit more risk that we really see continuation moves happening on the downside there. Okay, so as we go along on this though, we have this exact same strategy on so many time frames, you guys. It is insane. So when we're looking at this coming off of the lows, the 2T pattern is going to be one that you can go and flip over so that you can do it on the upside too. I'll show you just a couple of examples here from the last week or so that we've had in League of Traders, some of my trades, and then I want to share some other stuff with you. So League of Traders, we've got a channel here. I am just going to pull up some of our charts on this. And here's just one example. This is coming off of the lows. So it's a version of that 2B. So when we're looking at where we are at on the 2T, we're kind of looking at things like this happening, where we're getting those first pauses, and sometimes you can get a corrective move going back the other direction. You just have to flip this over and think of it as the weekly of the NASDAQ or the S&P, and then it can still continue later. So it's one of my favorite reversal strategies. And in fact, on that NASDAQ, on the one where I was looking on the continuation on the upside, that was what we saw happening coming off of that low too. So here is the 50 tick again. Just wind this back. Here, same pattern. So we're basically at zones of where we're seeing some of these shorter little kind of recovery bounces, but it's not really enough in most cases to sustain it. So it's just flipped over from what we're seeing on the weekly time frames. So you can see how the potential is still going to be there for further downside pretty easily in the overall market. So I know a number of our traders contacted me that they had gone to cash in their IRAs when they saw this pattern developing. And if you didn't, that's okay, because you can also use this to help you with timing lows. So when recoveries do happen, you'll see that same pattern like this coming off of the lows. So that can help get you in for when things start to turn around again. And the more you see it, the more it's going to sink in, the easier it becomes to see it again the next time. So I'm just going to show you a couple of quick examples here. You'll find a lot of charts in here. So gold was one, for example, that I was on Friday, and it was coming off of the highs. So these were my executions on this. The alert for it was a little bit earlier when it was coming off of that high there. So it's the same pattern. The interesting thing about this one, though, is that it already had a downtrend, so it wasn't very well established in the uptrend. What caught my attention was the fact that this was faster and then this was slower. So then it had the 2T, gave me the shorts, I took partials when it was coming into the congestion, gave a bounce, added on to it. So we saw that move as it was breaking lower. So this is just one example on an intraday chart on gold. Show you. So this is a megaphone. We're going to talk about that a little bit later this week. So here's another example, except on this case, it was one where we were looking at things that were heading lower, and then it went and formed that 2B. And so that would trigger the reversal to turn around on the trade. So we were looking in class for continuation on the downside. These were just a couple of ways that we were looking at how it could unfold. It ended up doing a bit of a version of both of them. But notice that two-wave measured move in there as that's coming into lows, that triggers that 2B. So that gave me the reversal for buy coming off of that low. Here you can see it in a little bit more detail. There's more on that gold. And when we were in session again, another time this day, or this past week, we were looking at oil, and I just mentioned on the fly because we were talking about something else. I'm like, hey, here's a 2T on oil on a 15-second, little teeny tiny time frame. But the fact is, you have the same setup. So it's really happening on every single time frame. This was captured after the fact. We were following it live, but then you can see it followed through and it actually kept going on the downside, coming off of that high there. That was what led to, again, the breakdown over here. So we were seeing the breakdown over here at this point. It's coming off of that high there. Why is it a 2T? It means two tops. So the reason on here was that we're looking at this top and this top, and it's coming just under that previous high there, goes into a pause, and then goes and does the second wave up. It's probably about a 123.6% extension on this case, just because the momentum was a bit stronger. But then it triggered the end of that move there, and it shifted the momentum. So what was interesting to me on this one was that it had kind of done the same sort of thing over here, but was sharper. So then it went into a slower version there. So we've got a lot of examples back in here that are just, many different time frames. Let me see if I can show you some other ones. Oops, we were looking at NQ, looking at target zones on that one. It was the same type of thing. Here, this doesn't quite go for a 2B. I was looking at reversal strategies on gold, and I was timing it. This was at support on a much larger time frame as a previous low here, and momentum you can see it was starting to shift. But notice here that that core idea of a 2B is there. It goes to just above that previous low. It just doesn't go to a slightly lower low. But what it does is it still allows the shift in momentum for the turnaround. So you're getting a variation of it, even though it doesn't go to that full lower low. The bonus with going to a full lower low is it acts as a flush for people that have stops under previous lows. So it kind of flushes things out and allows things to often go faster. So when you don't get quite that lower low, sometimes you'll get another base before it tries to get going, and it builds the momentum as opposed to just a steep reversal or turnaround. So that's one of the advantages of having the slightly lower low with the full 2B, is it offers that extra flush to the downside. All right, so what I want to share with you guys here too, I know a lot of you are stuck at home right now, along with me. It's not really much of a change in my routine here. So I am stuck at home. Hold on one second here. Kind of give you an idea, I just had my little guy stopping in to show me his latest rock collection that he has. So it's really a good time for everyone to really put on your study caps. How many of you have found that you're focusing on studying your trading and going back and reviewing your trading right now? I want to see a lot of yeses, since you're making it into class here on a Sunday afternoon, right? John has an emphatic yes. I like the exclamation points at the end. Lots of guesses. Okay, well, if you're not already, I've got an opportunity for you. I have not offered this before. You've seen me post my Fibonacci mastery classes and some of my other stuff, you guys, but my admin is like, okay, so how about we just offer them something that, we haven't done before as far as pricing on this stuff. We're only going to do it this week, and I was kind of going back and forth on him about it, I confess, because I'm like, well, we don't want to devalue the education. He's like, no, no, they know it's going to be good. So I'm like, okay, we'll do it. So what I did was we said, okay, you can get the Fibonacci Mastery, which is 8 weeks. They're all like small little videos, small little classes, like 20 minutes to 40 minutes. I'm actually going to show you inside of the members area what this looks like. So I think that is like one important thing here. So you guys see, hello, what is actually in here? I'm going to go and log into that while I show you this. But let's see, member login. I'm going to go pull that up. You guys can see that. And what we have in here is an 8 weeks course. There's also, I'll grab this over here. Trying to get to open in a new slide here for you. Here we go. So Fibonacci Mastery is down here. So I'm going to show you what this looks like in here. So there's lessons by week. And what you're going to find is that when you open each week, it is going to have mini lessons. So this is like the most complete course I've ever done. It basically takes you guys from very beginner stuff to more advanced stuff. And you can see there are additional videos in here. I put some bonus videos on each topic as well. So you go through each of these one at a time, and every one is also broken into segments. So you can go and review them however you want. So that's kind of, let's chat on top of myself there, right? So this is Fibonacci Mastery in here. And then we've made this as a package. So what I did after Fibonacci Mastery was I did a boot camp that basically took everything in there, kind of gave updates on it. We looked at different markets, went into some more detail, and that is 3 strategies using Fibonacci. So that's another 14 hours there, all on demand. And it includes Trade Tracker Pro for NinjaTrader 8, which allows you to put things like the Fibonacci fans on your charts as well. So that plus 3 months in League of Traders. League of Traders, how many of you are already here, League of Trader members? I know I see a lot of you guys out there. Yes. Great. So there's a couple of you I know are not. So let me give you the little rundown on what League of Traders is. It's basically a semi-private mentoring group where we meet every day for an hour at noon Eastern. And it starts off with Mentor Monday. And every Monday we have like one specific topic that we dive into. So the week begins with a lesson on that topic, just like you guys had here today with the 2T. And then throughout the week, we then go and look for whatever that topic was in the live trading. So we get to see examples as they're forming, as they're developing, things that are giving us higher risk, lower risk, and it basically is hands-on experience there from that point. Everything's recorded. We also got the app that you saw with Telegram. Everybody can chat over there. Let me pull that up again for you. So here's the main channel where you see me typing everything. And then we also have the chat channel here where all of you guys get to join in, and we kind of get off topic sometimes. Maybe more me than anybody else. I tend to post some of these crazy things for you guys. Kind of some levity into our day, but well, except for Karen there, or Scott. But anyways, what we have is we'll go into, you'll see other traders posting their trades and strategies, and you'll find that a lot of times people are in the same things. They might have slightly different entry points, but they're all in the same thing together because they're learning the strategies. They're not learning, hey, Toni just issued a trade in XYZ, let's go jump on it. They'll be like, oh, hey, there's a 2T pattern forming on the NQ. I'm going to trade that. And then they see everybody else's charts of their 2Ts and where they got in and their stops and everything. And yeah, exactly. As Nicole said, you're all taking the same trade and sometimes you don't even know it until afterwards when you're talking about it. So it's a great way to interact and reinforce everything that you guys are learning. So what we've done is we put together where you can get all three of these for the $6.99. And this is just for this weekend. So James has the offer expiring tomorrow, at the end of the day tomorrow. We're kind of guess doing like a 3-day weekend or whatever. But anyways, that's when it goes to. So you can get it at tonyhansen.com/homeschool. We did add an option that you can split the payments to. So there's a 2 payment option. You can do it on PayPal, whatever. And if you already have like the top 3 fib strategies, we can deduct that as well so that you can get Fibonacci Mastery and into League of Traders too. So that is my spiel here for today to get you guys to come and join me and keep me company as we're doing this whole homeschooling thing. You'll find that my kiddo often joins me throughout the day now. Now, I haven't quite gotten him fully into trading. He's a little bit more into Minecraft still at the moment, but I'm working on it. He's 8. I've got a little bit more time to get that sinking in. Right now, I view it as sort of like osmosis. He's being exposed to it all the time. Sometimes he walks in and he'll be like, that was a really great class you gave, Mom. And I'll have no idea that he was paying attention. So I'm like, yes, scored points. Right. Do you guys have any questions right now? Oh, Mark, that's a good question. And actually, Mark's question is League of Traders recorded or available live? Nicole's like, show them the membership area. Okay, let me show you that. So it is live, and then everything is also recorded and added into the members area. So you got League of Traders here. We go on into there. And we've got some core concepts, which are basic ideas. We've got Mentor Monday, which is going to give you the video archives that tell you the different strategies and different things that we are talking about every week. So this goes back for years here for annual memberships. You get like everything. So we've even talked about emotional trading, psychology, time development, wave counting, legal language, which is basically just an overview of everything we use. So you can see that there's a lot of detail that go into this. And then we also have the League of Traders live videos here. So you can go back and review all of those. And we've got bonus videos. That's where today's session is going to be for those of you that are members or join. And then here's where you can download Trade Tracker Pro. That's also available as part of the Fibonacci stuff. And then here's the login for all of your sessions throughout the week. They also get emailed to you, but you can always check them here online too. And then you'll get an email to get you into our channels on Telegram also. And that link again is just homeschool, since we're all kind of stuck at home right now. So what are my thoughts on where the ES is going right now? So this is something every Friday we do. Part of like this predictive analysis is that on Fridays, we go and take a look at what's happening in the overall market. And we look at a lot of different markets. So it can be everything from gold, bonds, indices, individual stocks, lots of different markets. Basically, whatever somebody wants to look at, we'll go pull it up. And that's what we do on Fridays. And so you'll see that coming up in, next Friday as well. So based upon what I gave you guys in today's presentation, what do you guys think is going to happen on the ES? So Michael asks, what are my thoughts on where we're going on the ES? What do you guys think I'm going to say? Some of you have an advantage from last week or from Friday. It does depend. That's one answer, depends. But what are the most probable at this point? Right. So we saw those examples. Let me pull this up on like prior two B's and two T's. This is a 2B. So what we have here is that when that channel broke, it then formed continuation patterns. So if we're looking at the overall market as a 2T right now, coming off of a 2T type of pattern, there's a good chance that we can get continuation patterns off of on the downside, and that we would be, right around this zone right now. Like I said, though, if something happens and suddenly things start to look around with the way the market is heading right now, with the way the virus is playing out, there are going to be instances where we will see this try to work its way back up, usually around that 76.4, and then we can get things that are starting to react again. So the momentum can shift when a 2T is really strong into a resistance level. You might get versions where it can shift and offer bigger correction. But when we're looking at monthly timeframes of the overall market, it's really difficult for any sort of a bull market to try to regain steam at this point. Let me show you that monthly. We'll just flip this daily chart over. I have to add some more time on this one here. See if I can go back a little bit more on this. I usually look at my larger time frames on TradeStation. Sometimes they don't always pull up on NinjaTrader. Nope, it's not going to let me go back any farther. But what we're looking at is that this has had three main moves up where the momentum is gained on each of those moves. So we basically have this parabolic type of move playing out. So what we were looking at over the last couple of years is the greater potential for this to go into a bigger correction. Because after you've got those three moves up where the corrections are about the same amount of time, there's a better chance you start to get a bigger correction. That's what this 2T is. Now, this can go and even develop into something larger like that, but look at how long it would take for such a thing to play out. So if this goes and say maybe forms into a larger megaphone formation, that could bring us into higher highs in 2022. What we would have to see is how does it react at this point? Does it come down in here and start to shift momentum at that low? That would allow it to bounce easier. Other ways that it could play out would be it could go into that stronger second move down. We could get that stronger second move down. So let me show you like Bitcoin, for example. I don't know if I have that permissioned on this platform. I never pull it up on NinjaTrader. Let me pull it up on, let's see, TradeStation. Oh, you know what? I know what I can show you. INO. INO is another one that went parabolic. Bitcoin, you'll see an example if you go back and watch last week's forward focus. So here's INO. This is another example of where something can go parabolic and you'll see the momentum shifting. So I'm going to pull up the daily time frame on this one. And we can see it on bonds too. So I'll show you that on TLT here in a second. So sometimes when things go parabolic, actually I want to look at intraday on this one. What you'll get is that move up. So here's our waves. It kind of starts out and gains speed. And notice we've got that similar type of pattern in here for the 2T, but it does that second portion with a gap. So here's the first move up into the slightly lower high, the pullback, and then it gaps and then does the correction. So we're the equivalent of like this type of move here. So what this did was it went for 2B. And again, that's where we can get these bounces off of the lows, bounced, but then the momentum kept shifting. So we're seeing additional versions of that momentum shift as it's coming back down. So that's another way that the overall market could correct at this point. So there's a couple of ways it can happen, but we have to look at how the momentum plays out at the different support levels at this point. Can fibs be used intraday, or are they better for longer time period trades? I use them for both. There's not one that I prefer them over. With time, you're going to be able to see a lot of the fib lines without even actually having to draw them, because you're going to have a good idea of where they're going to fall. So like, for example, this upside move, that's going to place this support at around 76.4. I'm going to be here around 61.8. This might be 76.4% here. Let's go put those on there. So you're going to have an idea of where they're going to play out. So here's 76.4, 61.8. Is this deal for all your trading lessons? Okay, so the homeschool, that is for everything that's in Fibonacci Mastery, which is, we released it at, I think it was like $14.97 when it first came out, and it's $19.97 on the site now. And it also includes 3 strategies for Fibonacci, which is a 14-hour boot camp. And then it includes 3 months of League of Traders, which will give you essentially 4 months worth of daily lessons. So monthly memberships in League of Traders get access to going back for a full month. Annual memberships then get going back from the very beginning of when League of Traders was launched. So they get everything. You can always change and upgrade at the end of 3 months, but the 3 months is what's included in this. Yep, like Andrea said, it's live coaching. Everything we do is live, and I try to incorporate what's going on in the current market. And we look at a lot of different markets. You'll find that mostly I trade futures these days. It's just easiest for me with my schedule, but I change over the years. You know, I trade a lot more stocks during earnings season because we get a lot more of like the gap plays and continuation moves. Sometimes I'll go in phases where I'm trading mostly oil, like that's what I'm trading for the most part right now. I would say 80% of my trades are on oil right now, but everything that I teach applies to every single market. So about half of the membership are stock traders. We've got a number of options traders in there. Of course, a number of traders that are kind of newer and are trading the micros, as well as those that are in Forex. So basically every single market under the sun, doesn't matter what you're trading. The point is to learn how to trade, not to follow somebody else's trading calls. So it's to build your confidence in your own market analysis skills. So it's the same type of stuff that I do in my private mentoring when I do one-on-one stuff. but it's basically allowing all of you guys to hang around and take part of. Are most of my trades very short-term day trading? Well, the majority are. I started out as a swing trader, so I still have a lot of stuff that would be considered to be swing trading or position trading as more of like IRA type of stuff. But my short term account, like my Ninja Trader for my most of my futures trades tend to be shorter term. Sometimes I'll have something going on in the background. So like maybe I'll have some contracts that are like long term and then I'll short term as well. One of the ways you can do that is you can do hedges using the micros now. So that's one possibility. Oil has half contracts. So you might be, for example, one direction on oil on a larger time frame, like as a swing trade or position trade on a breakdown on the weekly charts. And you might find then there's reversal setups on the smaller time frames, and you can trade like the half contracts on that, or vice versa. Vice versa probably makes more sense for those of you that are oil traders because the half contracts in oil trade kind of funky. They're not quite like normal micro contracts. They trade in quarters, so it's a little bit different. How long can you access the courses? Is it just for 3 months? No, so it's lifetime access. Let me put that back up for you guys so you can see that. So it's lifetime access for all of the courses. That means as long as the site's up and running, you've got access to all of it. And I do at least a 2-year guarantee. My website has been around for close to 20 years now. So we have people that have purchased courses years and years and years ago that will still go back and review them. We're not updating the older courses, but we are updating some newer stuff. So, but you can still access them. Correct. You have basically today and tomorrow to decide. So you've got any questions that you might have, you can email me or my staff, help@tonyhansen.com, and we can answer your questions on that. Is there another Fibonacci webinar tomorrow? No. So League of Trader folks and those that are joining us, we're going to be going into megaphones because that's going to be one of the strategies that's going to be really common over the next couple of weeks, I think. So thank you, Nicole. Best decision she made. So we're going to be going into megaphone strategies. Do I have samples, please, of the course content? Of course. Let me go back to that. I'll show you guys that. Again, it's in here. Oops. All of my classes are basically along the lines of what you saw here today. Fibonacci Mastery is laid out in smaller segments so that you guys are shown one concept at a time. So you can go into details on smaller time frames in smaller increments. And then the boot camps laid out, they're longer, but you can also break them down. But they're given as they were live classes. So there was an audience involved when those were recorded. So let's see here, like Mentor Monday, for example. We've got, this might go play in the background here on me. So what we were doing this week was looking at a core strategy for what's happening now in the market and some of the core things to kind of keep things a little bit simpler here this week. Let's see if this plays automatically or on me or not. So every session, technically Mentor Monday is like 45 minutes, but I always go over. So we usually end up a little bit longer, but we go into, let's see, pull this up here. I don't want this to like bump into here too much. So we talk about different strategies. Oh, hey, here's was the to be on oil. One of my trades on oil here from Monday or over the weekend. I guess it was Sunday night. Sunday night. So this was a to be. So this shows you an example of how you can get momentum changing and then leading to the reversals. And then what I was looking at for target levels. So this is just a Mentor Monday. So this is part of League of Traders. So when we're looking at, let's go to Fibonacci Mastery here. So when we're looking at Fibonacci Mastery, things are broken up. So every week has a different core topic or focus for that week. So let's pull up this one. We'll go to week 6 here. So week 6, we were looking at some individual specific types of strategies and how to really get down into the details of them and use Fibonacci with them. So a lot of times the way you guys might be traditionally taught some of these core setups like a head and shoulders are going to be, well, wrong. So they're going to have a lot higher risk. So what I do in those that you guys are probably already familiar with is I show you how I trade, how we break them down into individual components that show you the development of the pattern from the very beginning that will increase or decrease the risk on the trade, and then how to get into that trade based upon that. That's actually earlier on in the course that goes into the breakdown on the different specifics. So like this is week 6. So let's see here, probably around week 3. So we look at things like time development in different patterns. There's also a section on advanced trade management. So we look at things like momentum, understanding momentum. So I recommend starting out with Fibonacci Mastery, then going into the 3 strategies one, and then diving into League of Traders. You can still, of course, follow along with League of Traders as you're going, but once you go through this, everything we talk about in League of Traders is going to make more sense because everything's kind of like rapid fire in League of Traders, even though we have one specific topic every week. It builds upon the knowledge of previous weeks. So it's really good to go back and review things because you'll pick up things the second time around that you won't have realized the first time around. So that's something that's really important always with your education is go back and watch it again. Like when you're watching a movie, the first time you're watching a movie, you might miss things, especially if it's maybe some like psychological thriller or something that has a surprise ending. And you go back and you'll pick up on additional clues that would have told you what that ending is going to be that maybe you missed it the first time around. That is what going back and reviewing all of your studying and lessons and even your own trades is going to do. All right, so thank you guys for joining me today. Do you have any other questions? Oh, you're welcome, John. Thank you, James. Well, thanks again, everyone. And if something does pop up that you do want to ask about, like for example, you have like individual stocks and stuff, you know what? Join me on Friday for Forward Focus. It's part of League of Traders. It's free. You can all join in. So you can come in there and ask me any questions you want on any individual stock. And even during League of Traders Live throughout the week, we often talk about what's going on in your guys' individual focus area. So for example, some of you are looking at Forex markets. So we'll look at those and kind of help give you an idea of breaking it down. And I don't always just tell you the answer. I'll be like, hey, what do you think and why? So I'm really about pulling that knowledge from you guys and kind of pounding it in there. So making you doing some critical thinking skills. So don't think you're just going to like get off easy and like sit around and soak in information during League of Traders. I will ask you questions there too. Like I said, it's like group mentoring. So Fibonacci Mastery is going to take you where you can sit back, do a little bit at a time, review the core concepts in League of Traders, same type of thing. But then when it comes to the live classes, it's really good if you can participate too. And if you can participate in the forum, you're going to get more out of it. Is it possible to start League of Traders 3 months a little bit later? Yeah, all you've got to do is send us a notice at help@tonihansen.com and we can put off the start date. So if you want to, for example, start with Fibonacci Mastery and the 3 strategies and then start League of Traders in a month, just shoot a message over to Sarah at help@tonihansen.com and say, hey, Toni told me you would let me do this. She might glare at me or something because she'll have to go in and play around with membership stuff, but just tell her I said that you can do it. Forward Focus is free. That's on Fridays. And you can just go to tonihansen.com/forward focus to join in on those. It's a great chance to get like some mini lessons. You're welcome, everyone. Thank you again. And I look forward to seeing a lot of you here over the next couple of weeks and seeing how you are applying the information. That's always the best part, is when I see you guys like taking the same trades that I've taken. Some of you often even get better better entry points than I have. All right, you guys, take care. Be safe out there, and I'll catch up with you later.